Hello everyone, October 27, 2021. So this video is pretty important because I get a lot of questions from a ton of people. People in the Daily Plays comments, people sending me messages asking me whether or not a company is a grenade, the company is a solid company, whether I would hold it overnight. So, I mean, I'm not trying to offend anyone. Our goal here at Ultimate Traders is to stack greens, trust me. Whether it be Tesla, which I actually have a vendetta against Elon Musk, because I shorted Tesla in 2014. I bought puts in 2017. He actually got me muted on Twitter in 2014, but we're not here to go over that. So whether it's Tesla, whether it's EMC, whether it's GameStop, whether it's Prague, we're all here to try to stack greens. I don't want stocks to go down. I want the stocks that we buy, that you buy, that everyone else buys to go up. I started replying a lot on Twitter about a month ago, and I'm even being very nice to everyone on Twitter. You know, not saying what I mean. I'm trying to amp stuff that makes sense, stuff that should go up. So the point of this video is how you can tell if a stock is speculative. Okay, I mean, a lot of us are new. I understand that. You know, since the old school, I would go to Yahoo and go to finance. I put in the ticker symbol. So you can be brand new to trading, and you too can still understand whether or not the company makes money. Because if you put in a symbol, you know, I'm not saying anything bad about Prague, but just, you know, put in Prague on Yahoo Finance. You don't have to know anything about stocks, but when you put in Prague, you can have an earnings per share. You can have a market cap, meaning how much the share price is now times how many shares they have. That gives you the overall market cap. Okay, so if the stock that you're looking at, the earnings per share is negative, means the company does not make any money per share. If the company does not make any money per share, it's speculative. It's speculative. If you buy it, if you trade it, if you hold it overnight, there's a risk. What I say with all stocks, DWAC, which doesn't even have a company yet, a lot of these SPACs don't even have a company yet. Trade them. When you're up, trade them. Buy them on increments, sell them on increments. Okay, a few months ago, when SPRT got super hot, I had someone tell me that GREE, because now it's GREE, the merged to GREE, was bigger than Coin. Okay, if you looked at Coin makes money, it has sales. GREE, expected sales of 2022, 75 million. Okay, and SPRT was like $1 billion company with no sales. So that's another thing. So if you're a company, if you're on Yahoo Finance, you put in your company, right? Put in any ticker that you want to put in. You put in your ticker. You take a look at the market cap. You take a look at earnings per share. You might not know anything about a company, but take a look at the last earnings report. If there's no earnings report, you already know it's speculative. I mean, you're basically making money buying the stock and selling it to someone else that's also speculating. So what you want to do, like I'm saying, is look for the last earnings report. I usually check 2 or 3 earnings reports, but look at the last earnings report. Okay. Right now I'm going to use Snow as an example because no one here trades Snow. So Snow is a $200 billion company. It could be higher right now. It's going up, right? So Snow is a multi-billion-dollar company. Take a look at the last earnings report. There's no sales, all right? And they're losing money. So if your company has no sales, obviously can't make money. to be 100 billion, 150 billion, or 200 billion, I would think generally you need to have earnings. You need to make money. But before you make money, you need sales. If you can't have sales, you cannot make money. What does that mean? Your stock is highly speculative. In this case, actually, let me use Bill because I'm buying Bill puts. So Bill is valued at $30 billion, a little bit more than $30 billion. For 2022, the company is expected to have under $500 million in sales. On this $500 million in sales, they're going to lose $100 million. They're going to lose $100 million. So that means they're losing money. Is $30 billion a right valuation for a company like that? A company that's not even growing 100%. So for me, I don't mind if I buy a company that's losing money if it looks like the trajectory is that they will make money within 12 to 18 months. If you want to tell me your stock is going to make money 2 years from now, or your stock is going to have some drug a year from now, I'm sorry, no offense to you, I don't want to hear it. All right, I've been trading since as a little kid in the 90s. I've seen everything. I've seen companies that were supposed to cure you of cancer, cure you of AIDS, make you walk again, make you see again, make the deaf hear again. It does not happen. If it does happen, it's like 1 out of 500 of those biopharmas. Okay, so basically, realistically, your company has to do something. So today, for example, I'm using Aaron's, AAN, okay? The company is worth about $700 million because it dropped hard. So the market cap, if you check on Yahoo Finance, is maybe low 700 million, all right? All right? It's going to have close to $2 billion in sales. $2 billion in sales, which is a lot higher than how much the company is worth. On the $2 billion in sales, they're going to make roughly about $2 per share, and right now is trading at $23, $24 a share. So that's 11 times earnings, 11 to 12 times earnings. The company also bought back $37 million of shares. So when a company has no debt, and they have no debt, take a look at Yahoo Finance, you can see they have no debt, they're making money, and if the stock drops, since they're making money, they have the ability to buy back shares, which is what they're doing. So that's why I like Aaron's. If your company is losing money, has no sales, where are they getting money from? There's only 3 ways for a company to make money. One is to have sales. So you have a business. You're selling something, doing a service. You're doing amazing. You get money. That's 1, sales. 2, you borrow money, usually in the form of bonds. If it's a new company, usually the interest rate is near 10%. Okay, so Nathan from Queens didn't say 10% is junk. That's just what the industry calls it. So if you're getting a bond and your company is getting between 8 and 10% or higher, it's already considered junk. Okay, and by the way, if you want to check the health of the company, you don't look at the stock. You look at the rate of the bonds that they're getting. So if they're getting coupon bonds of 8, 10%, that means it's considered junk. Okay, so 1 is sales, 2 is bonds because they borrow money. And 3, companies love it, but traders hate it. They get cash out of thin air. What do? At the market offerings. So if you're buying a stock that doesn't have any sales, can't get any sales, if you take a look at the balance sheet and all they're doing is borrowing a bunch of money, what's the best thing that can happen? The stock goes up. And when the stock goes up, they print shares. They print shares to get money out of thin air. Pretend that you bought a house. You bought a car. You had a piece of paper, a stock that tracks you. Just pretend it's a stock that tracks you that is going to calculate your lifelong income. All right. So all of a sudden, other people, we're going to call them traders, because like traders, are saying, "Wow, you know what? Nathan is going to make a ton of money in his lifetime. I'm gonna bid up his stock." Okay, but you already know. We're not going to say Nathan because Nathan is pretty successful. Let's say you're someone else, right? Okay, let's just say you're someone else. So if you're not going to have a steady stream of income, you see people bidding up your stock. You have a mortgage. You have car loans. All right? You're not getting cash any other way. Well, you see people bidding up your stock and you're allowed to sell the stock. What are you going to do? You're going to do number 3 because 1, you have no sales. 2, you have a mortgage in the car. You cannot borrow anything. You're cash strapped. You're going to do number 3, give shares and get cash out of thin air. So if you're looking at a stock with constant offerings, take a look even at Yahoo Finance. You could check the news. It's going to list all the times I had offering. If you're having a stock with a lot of offerings, you already know it's speculative. So this video was about grenades, speculation, and how you can tell whether or not you're in a company that's speculative. Okay, if you're in a company that has a P ratio of below 30, because S&P 500 is around 30, below 30, it's an unshortable company. It's a legit company. Okay, if you're in a stock that has a P ratio of 100, let's call it a hot potato because it's risky. If you're in a stock that's losing money and has no chance to make money, your guess is as good as mine. The only way that your stock is going to go up is retail army, and you just got to hope that they're going to bid it up the next day. Whether or not you want to hold it overnight, the best way to actually go about this, and I have another video, is to go on Twitter, go on StockTwits, go on Reddit, keep posting fuel and army. You might even have to make up fake news. That's a pump and dump. If you start rumors, fake rumors, that will make the stock go, because otherwise it's a pump and dump. All right? It's a pump and dump. And before I go, I want to let you know in this video, no real stock should ever go up over 100%. The only way a stock will go up over 100%, a real company, is they get offered a buyout. If someone else offers, or people are bidding to buy out the company, it will go up instantly, and it can go up 200%, or 300%. Or if you have a $100 million company that signed a contract worth 300 or 400 million, then it's possible that your company could double or triple. But generally, real companies do not go up 100% in one day. They don't even go up 50% in one day. If it's going up 50%, chances are your company is speculative. I'm not here to offend anyone. We're ultimate traders. I want everyone that's here to know whether or not it's a grenade so that you can plan your exits, buy and sell in increments. All right? So if you have questions, you could ask me Ultimate Traders. You could ask me YouTube. All right, have a great night.